Be Wealthy and Smart, episode 1011.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how to protect yourself against inflation, because these inflation numbers sure are heating up, and I'm getting a lot of questions about what can people do. They're looking for high-yielding savings accounts, or looking for where can they put their investment money, what can they do to combat the ravages of inflation. And so I thought I would put together this podcast and talk about it. First of all, we know that inflation is running at a rate of about 7.5%. At least that's what they're reporting. But the real numbers are much higher. And I've done other podcasts on this recently where we've talked about what is the real rate of inflation. Because 7.5%, while it is the highest since February of 1982, and it's well above market forecasts of 7.3%, and we have soaring energy costs, labor shortages, supply disruptions, etc., and lots of reasons for why this is happening. The reality is that this may be a result of a lot of excess money that's been created, 80% of which has been created in the last 2 years. And we're also seeing that the calculation, the formula that they use to calculate the consumer price index is not the same as it used to be. And were we to calculate it the same way that it was calculated in the 1970s, we would see the rate of inflation at double what's being reported to us, over 15%. And this is documented by shadowstats.com. John Williams does a great job of showing us apples to apples. If we did the same comparison with the numbers we used to use in the 1970s, the real rate of inflation is over 15% annually. This compares to 2.1% inflation in 2017, 1.9% in 2018, 2.3% in 2019, and 1.4% in 2020. So those numbers as well were probably likely double back then when we used the same metric that we used in the 70s and compare apples to apples. However, they were a lot lower than what we're seeing today. And the rate of inflation really picked up during the pandemic and after the excess money printing, the quantitative easing. So when people ask for savings accounts that have high interest rates, first of all, there is no such thing as high-yielding savings accounts because interest rates are still very low right now. And although the Fed just increased interest rates by 0.25% this week, well, interest rates are still very low. And savings accounts are essentially just leaving your money in cash, which is losing value due to inflation. It's losing purchasing power. So that's where you don't want to be, is just hanging out in cash. What you want to do is have some real assets, some things that will benefit from devaluation of the dollar, if you will. What are real assets? They're physical things such as silver or real estate, but also stocks like in the S&P 500, businesses, mining stocks, collectibles, other commodities. According to Google, among 22 major commodities, 9 rose more than 50%, including prices for familiar commodities such as coffee, which climbed 91%, and cotton, which climbed 58%, and aluminum, which was up 53%. So these physical commodities are also, for the most part, gaining in value. Now, if you want to look at something that's considered, quote, safe, that might be Treasury inflation-protected securities, or TIPS, which provide protection against inflation. And the principle of a TIPS increases with inflation and decreases with deflation, as measured by the Consumer Price Index. But again, the problem is the CPI is not accurately measuring real inflation. It's using a formula that is a bit askew from how the real numbers used to be calculated, which was effectively done in the 1970s, but has been changed and shifted to downplay the rate of inflation today. That's because if the government reported the real inflation numbers, that means they would have to inflate Social Security and other government programs that are indexed to inflation. And they don't want to do those large increases, so they downplay it and modify it with a formula that is not on point as it was back in the 70s. So we have to go back to that formula in the 1970s to find the real rate of inflation, and that is over 15%. Another way to protect yourself against inflation is by adding cryptocurrency. It's no secret that my favorite cryptocurrency is XRP, and that has been kept very affordable because it has been under the cloud of a lawsuit by the Securities and Exchange Commission since 2020. But the good news is that it's kept it very affordable, right around 75 cents today, which means for a very modest investment, you can get a fair amount of XRP. And I think we need to take a long-term view here and say in the next 3 years, we're going to see a lot happening in the cryptocurrency sector. I think we're going to get laws for cryptocurrency. Recently, we had the executive order come out, which said in about a 6-month period, they're going to be creating new crypto laws. So I think very soon this year, we're going to see cryptocurrency laws, and it could be sooner than 6 months, in my opinion. But those laws are going to allow institutions and hedge funds and endowments and pension plans to come into the cryptocurrency space. So the big wave of money has yet to come into crypto. And I think the next 3 years is when we'll be seeing that huge wave of money coming in. So this is a great time to get positioned in some low-cost, high-potential cryptocurrencies such as XRP. We already know that central banks and governments have been using XRP on a private ledger, and that it's the one that is projected to handle all of the money and make a dent in the universe. At least that's what Ripple has told us, and we agree with that. Recently, I've done 4 videos with Brad Kimes and his YouTube channel, Digital Perspectives, and I really encourage you to watch those videos because we were able to drill down and cover some of the most asked questions about XRP. And the last video that I did today with Jimmy Valley and Brad talk about the valuation of XRP and what the real value is using a calculator that was developed by a board member at Ripple and using real numbers to insert into that calculator. You might be surprised at what we come up with as the real value of XRP. Not the 75 cents it's selling for today, but what is it really worth? And what is the potential value that it could get to? So I'll leave those links to the videos in the show notes in case you want to view them. I do recommend that you watch all of them because we cover different questions, and all of that is important knowledge for you to have and to understand. So, however you decide to protect yourself against inflation, whether that is owning real assets such as physical silver or gold, or investing in mining stocks or the S&P 500 stocks or other asset classes, real estate, collectibles, commodities, Treasury, inflation-protected securities, or cryptocurrencies, it's important for you to think about how your money is allocated and if you're positioned to win or lose as the purchasing power of our money continues to be eroded. Not financial advice, just something for you to think about and consider how your decisions impact your financial portfolio. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.